Good morning, everybody. This is Patrick MontesDeOca with the live trading room for the Equity Management Academy. On this segment for December 5th, 2014, we're going to review the VC price momentum indicator signals that were produced last week, and how they reacted, basically, how the market reacted to the signals that were posted last week, and what we can look forward to for next week. So if you go to the my website, ima2trade.com, and you see on the left side updates, if you click on updates, it will take you to the latest report for the weekly VC price momentum indicator, ETFs, swing trading instructions, weekly for December 5th, 2014. We're going to take a look at USLV, which we're going to feature on this podcast. But first, I would like you to click on the gold and silver weekly swing trading instructions, or you can click on my name. And if you click on my name, it will show you all of the reports that I have published over the last couple of weeks, and in fact, months and even years that I have posted live on this website. But what I would like to concentrate on right now is, if you go to the report that was published last week, the report, you can see a video which I posted for December 1st in the homepage. But let's take a look at the report that we posted for the gold and silver VC price momentum indicator. I am looking for this report, and we're looking at the ETFs in here, and let me go here to older posts, and I believe that this is the report that was published on November 28th for the gold market. In this report, the gold market indicator was pretty much confirming to us that the market closed at 1175 last Friday, and closing below 1179, which was the pivot point for the week, or the metrics for the week. It was confirmation that the momentum was a little bit bearish, but if it closes above 1179, it would basically negate this bearish signal to neutral. And it also told you that if it came down below 1179, that you cover your short positions at 1160, 1145, and if you go long, to put your stop at 1145. Your targets, if you go long, your first target is 1179, which is the code nearest to the buy signal of 1160. You can unload some profits here, but if it goes above it and closes above it, your targets are 1194 to 1213. So this was published in November the 28th, and let's take a look at gold and see what it did. Here we have a chart that represents the price of basically the gold futures contract, and on the 28, which is this big bar here, is the close of Friday. on this report. And this report was basically telling you that if the market was to come down below 1179, and it closed below 1179, obviously, that we can be looking at prices as low as 1160. And on Monday, coming into last week on Monday, the low was 1141.70. So it came right into this buy area of 1160 to 1145, and it picked up the buy signal with a stop at 1145. And it told you that if you buy it here, once again, your first target is 1179. And your second and third targets were 1194 to 1213. So on Monday, that very same day, the market opened at 1159 and a half. It made a low of 1141.70. It picked up the buys at 1160, 1145, and it took out basically the target of 1194, or very close to 1213. The high basically was 1221 on Monday, so it took out the profits of 1194 and 1221 as of Monday of last week. And you could see pretty much, obviously, how profitable this trade turned out to be. Let's take a look at this week's algorithm and see if we can anticipate what the market in gold is going to do next week. What I'm going to do here is I'm going to add the codes for next week, and we're going to take a look at it and see what we can expect as we come into the trading of next week for the gold and for the silver market. Taking a look at the December gold futures contract, it closed at 1192 on December the 5th. And with the market closing below the 9-day moving average of 1199, it indicates the market is still a little bit bearish. But if we get a chance to close above 1199, the trend momentum would turn neutral from bearish. The weekly momentum indicator code, with the market closing below the VC weekly momentum indicator, actually closing above the 1185 weekly price momentum indicator, it confirms that the price momentum is bullish. And you can see it right here. The market closing above it is bullish. But if we close below it during the week, it would basically negate this bullish pattern to neutral. If it closes below 1185, then look to cover those long positions at 1149, which is this level here, to 1106, which would be making basically a new low for the gold market. So to review the signals for next week, the market closing above the pivot point of the metrics VC code for the week of 1185 is confirmation that the market is slightly bullish. The target is 1228, and the stop would be 1185. Closing below 1185, it's a reversal short with a target to the buy one level of 1149. And if you have multiple positions, you can wait for the second level of 1106. It doesn't mean that these codes will be activated, but it simply means that the mathematical algorithm that we have is giving us the two sides, you might say, of the market in terms of the resistance levels that we see here in the red lines, and very specifically telling us where we could take profits if we're long, or basically to go short. We do not recommend to go short at these levels here or higher levels, as the market would indicate a breakout to the upside. The recommendation would be to take profits at these levels and try to buy the market ideally at the buy one or at the buy two level as a position trade, if the opportunity presents itself that we see these prices trade at these levels. Let's take a look, if we can, at the silver market and see what the report that was published on November 28 was anticipating for last week. Let's take a look here at the report that was published basically on November 28 in the silver market. The December silver futures market closed at 1536, and with the market closing below the 9-day moving average of 1653, it was confirmation that the momentum was still bearish. But if it closes above 1653, the bearish trend would be negated to neutral, basically. So you want to be looking at the moving average of 1653. If it closes above it, the short-term bearish signal would turn to neutral. The algorithms were indicating that on the weekly momentum indicator, with the market closing below the VC weekly of 1580, it indicated that the price momentum was bearish. Once again, it told you that if it closes above 1580, that it would negate this bearishness signal to neutral. The weekly price indicator code was telling you that if we come down below 1580, look to cover your short on corrections at the 1492 to 1447 levels next week, which was this coming past week. And then go long on a weekly reversal with a 1447 stop close only in good till cancel order. And if you go long at 1492, you can take some profits first at 1580, which is the code above it. And the balance, you can take it out at 1624 to 1713, because if it closes above 1580, the target's at 1624 to 1713. Let's take a look at silver, what it did last week as we came into Monday. This was the close on Friday. And on Monday, the market opened at 1539, below the code of 1580. And so the targets were 1492 and 1497. The market made a low of 1415 on Monday, the 1st of December, and it picked up the buy at 1492 and 1447. If it told you if you bought it long here, take your profits, some at 1580, which is about a $4,000 profit on one contract, and then the balance you can take it out at 1624 to 1713. That very same day, the high was 1661, so it was able to take out the first target of 1624, and if you carried a trailing stop on your second position, let's say at 1713, you would have gotten stopped out at a profit. So once again, this signal was tremendously accurate, and it accomplished the goals and objectives all in one day on Monday. Needless to say, The technical pattern that developed on Monday was a major key reversal day to the upside, a very rare, extremely bullish confirmation that the lows were made in silver on Monday, December the 1st at 14.15.50. And so now let's take a look and see what this week's algorithms are telling us what to expect for next week of trading in the March futures contract in silver. We're going to add the algorithms for next week here, and see what they are telling us. On December the 5th, the silver futures contract closed at 16.28. And the market closing below the 9-day moving average of 16.52 is actually confirmation that the weekly trend momentum is bearish. A close above the 9-day would negate the weekly bearish short-term trend to neutral. And it also told you that basically the weekly momentum indicator code, with the market closing above the momentum indicator of 1575, which you see this green line here, it's the weekly VC code. It confirms that the price momentum is bullish, and your targets basically are the levels of 1624 to 1713, which is the second level above. And so the market is in between the sell 1 and sell 2 levels on a bullish mode by closing above the 1575 weekly pivot point that is basically putting into the mix a target of about 1713. If we were able to close above 1713, I think we can run up to about 1780, 1781. Closing above 1781 can be extremely bullish. So let's take a look here for a minute and see what the resistance levels here, the Fibonacci fan resistance levels, are telling us, using basically the high that we made of this move early this year to the present low that we just made last Monday. We pretty much is confirming what I have shown you here, that the resistance of 1713 is also matching basically the downtrend line resistance level of the Fibonacci fan line. And it coincides basically with the confirmation that this level we can expect some kind of resistance. If we add the Fibonacci retracement from that same period, we're going to have a better idea in terms of the profit targets that we can expect next week. And then here we see that the using the high that we saw early this year to the recent low, basically we're looking at a 23% Fibonacci retracement was completed, and we closed basically above it, and we're looking at the target of 38.2% retracement, which is in the 1722 level to be met. And so we're getting a lot of confirmation that the 1722 level is offering what appears to be some strong resistance, and closing above this resistance obviously puts into the picture the 50% retracement. or resistance level of about 1811. And you can see how this Fibonacci and retracement and Fibonacci trend lines resistance seem to match the numbers. And so there's a lot of synergy in terms of where the resistance can be identified for the silver market. Once again, the pattern is bullish, closing above 1575, which is the pivot point of the metrics for the week. Our targets are into that 1711 to 1713 area. Closing below 1575, the market is basically projecting a buy one level target of 1468, and if we break the previous low of 1415, we can come down to 1308 as the buy two level indicated using the VC price momentum indicator. Let's take a look and see next week what the market does in terms of price in confirmation, and we can move from that point on and see what we can expect over the next couple of weeks. I want to take a look in gold, in the gold market here for a minute, and see what prices we can expect by using the Fibonacci fans for that same period this year to the recent low. And we see here that on Monday, Tuesday, and all last week, the market has been trying to penetrate that resistance level, which matches the downtrend fan line resistance level of Fibonacci fans, that in closing above this level here, which is the basically the 1212 level, then the targets, the upper targets above are into that 1228 to 1264 levels, and as high as 1278. Let's add the Fibonacci retracements to this equation and see what they are telling us. I want to see if we can see the Fibonacci retracement and have some kind of a good idea in terms of where we can match it. So let me see if I can do this analysis here real quickly. Okay. In using the recent high this year so far to the recent low of 1130, then we're looking at retracements that pretty much into the 1228 level, confirming once again the VC codes that we basically have calculated for next week. And they match as well the upper end of resistance. So we're looking at resistance to be into that 1227 to 1246 level on the upper end of the market. And the nearest fan line resistance is at about 1212. Closing above 1212, then look at the upper end of the targets of 1238 to about 1267. If we close below 1185, then look for targets of 1149. And if we break the recent low that we made here of 1130 and a half on November 7th, then the buy two level of 1106 is your next target as a buy zone. And so let's see what happens here as we come into next week. And see what the market is telling us we can expect with regards to the February futures contract that we basically are using as an indicator to see what prices we can get into next week. In the meantime, this is Patrick MontesDeOca. If you have any questions at all, please feel free to call me under no obligation whatsoever to 805 area code 418-1744 and see if we can use some of these algorithms to customize on your trading objectives with regards to risk management and also strategies. This is Patrick MontesDeOca wishing you well. Have a great trading week, and until next time, take care.